The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, Realtors. This is Byron King, General Counsel, South Carolina Association Realtors in Columbia. It's September 21st, 2017. Today's webinar is on flood insurance with Lisa Sharrard. And she has an impressive resume that I'm going to read in a second, but just as a shorthand, just know she's a nationally known expert on flood insurance and has presented for both the National Association of Realtors and the South Carolina Association of Realtors in the past. And we really appreciate Lisa doing these webinars for us on this important topic of flood insurance. Lisa Sharrard opened Choice Flood Insurance in 2016 after years of working with flood insurance policyholders and a role as owner of Carolina Flood Solutions, doing business as U.S. Flood Solutions. She has been a licensed property and casualty insurance producer since 2013, focused solely on flood insurance. Her direct experience in all facets of the National Flood Insurance Program, NFIP, combined with an institutional knowledge, provides a competitive edge while serving her clients. Prior to entering the insurance consulting arena full-time in 2013, Lisa worked as a senior professional, training underwriters and customer service reps on the NFIP, supporting FEMA direct flood insurance contract. Lisa's career spans 30 years, serving as the South Carolina NFIP coordinator for the South Carolina Department of Natural Resources, project manager for the state's community assistance, flood mitigation assistance, and for FEMA's risk management on mapping, assessment, and planning grant programs, working in North Carolina, and as the assistant NFIP coordinator. Lisa served as the chair of the Association of State Floodplain Managers from 1999 to 2001, and served on FEMA's Community Rating System Task Force from 2002 to 2009. Lisa is a certified public manager, CPM, and possesses both dual flood certifications as both a certified floodplain manager, CFM, and an associate in National Flood Insurance, ANFI. She currently serves as a member of the Certification Board of Regents for the CFM credential. Lisa is building a thriving book of business promoting both private and NFIP options to flood insurance, and is a licensed property and casualty insurance agent in South Carolina, Florida, Georgia, Kentucky, Louisiana, Massachusetts, North Carolina, New Jersey, Rhode Island, Tennessee, and Texas. Lisa, thanks for doing this webinar for us, and we'll turn it over to Lisa.
Great. Thank you for having me today, Byron. And Mike, thanks for running the webinar for us today. We're going to talk about hurricanes and floods and 5 things realtors need to know. But I have to tell you, I've lied to you. I'm not going to teach you 5 things. There's going to be one more. We're going to do the 6th thing right now. First thing you're going to learn is that the NFIP has been extended through December 31st of this year. So that is a big deal for us, trying to get everything set up so that we can continue to run this program beyond September of this year. Congress went ahead and extended the program, so that means we're good to go for a short-term extension through December 31st. Conventional wisdom says there's probably going to be a couple of short-term extensions before they actually do something final. We've got a lot of flooding going on, a lot of hurricanes. We've had Harvey, Irma, Jose, and now Maria that have just devastated and are devastating our shorelines in this country as we speak today. So our prayers and thoughts are with those families that are recovering. I hope that all of you here in South Carolina who are listening are safe and your families are good. And if there's things that we can do to help you in your recovery, please let us know. First thing I want to talk to you about, disclosure forms don't tell the whole story. We have questions on the disclosure, property seller disclosure that talk about flood damage. Is there any water damage? And what I'm finding out is that doesn't always tell the whole story. If you know what look at the definition, what Merriam-Webster says is to know, is to perceive directly or have direct cognition of, or to have an understanding or have a personal knowledge of something, or be familiar with, or have an experience of. Well, what we're finding is that we have a series of homeowners who have maybe had the house for a couple of years. They didn't have a flood when they owned the house, and now they're selling the house. And do they know that there's been flood damage in the house directly? Maybe not. Maybe they didn't experience the flood themselves. Perhaps the seller disclosed to them that there was flood damage, but they really weren't able to verify that, and or maybe they forgot. So one of the things I'm going to suggest you to do is to ask the following questions. Number one, ask to see the prior owner's disclosure form, if they have access to that. Or did anyone in the household receive disaster assistance? Well, why is that important? Why do we need to know? Because if they're eligible for a preferred risk policy, let's say they're in a BC or X zone, that low risk area. If they had disaster assistance in combination with a flood claim, then the preferred risk policy is not a tool that will be available to the the new homeowner. They will not be eligible. Has there been any prior flood damage? Ask if there's been a prior flood policy, and if they don't have one now, why that policy was dropped. It could be that policy got to be so expensive that they opted to drop the policy. There are a couple of telltale signs that you want to ask questions about. Second thing you need to know is you need to know the zone. You need to know the current flood zone and the proposed flood zone. You can get a free flood zone determination on my website at bfloodsmart.com. That website, it's set up there. It'll ask you a couple questions, but it really is just set up. It'll give you a guaranteed flood hazard determination form through one of the insurance carriers that we use. You also need to know that there are preliminary maps out there. We have preliminary maps that have been introduced for Horry County, Charleston County, Beaufort County, all up and down along the coastline, as well as the interior portions of the state. So you need to be familiar with what the impact of the new proposed flood zones boundaries would be on properties that you're listing or looking to list, or looking, if you're representing the buyer, you want to do your due diligence. So you can look in those as well. But the following counties, Anderson, Colleton, Pickens, Oconee, and Richland counties, their new maps are becoming effective on December 21st of this year. Dorchester County's maps became effective July 18th of this year. So we've got new maps that are coming out, and as soon as the letter of final determination is issued, after the appeal period closes, when the letter of final determination is issued, there'll be a 6-month waiting period before the new maps get issued for the counties who are currently in preliminary format. If you have any questions on those, feel free to ask or to email me later after the presentation. I'll provide my information. Third thing is buy before you list. Buy flood insurance. Make sure you have a flood insurance policy in place before you list the property. That eliminates any potential issues during the closing process. I'm coming across a number of people who are trying to buy flood insurance or get quotes during the closing process, and we don't have our ducks in a row. We don't have elevation certificates. It's delaying the closing process. In one case, there's no base flood elevation, and the flood insurance is about $6,000 a year, and the people will not qualify for a mortgage. So if the seller will put the flood insurance policy in place when the house is listed, it'll make that closing process a lot simpler, because that policy, except for USAA, can be transferred to the buyer. You want to avoid all potential delays again in the closing process by offering potential buyers an elevation certificate. It takes anywhere from 1 to 2 weeks to get an elevation certificate completed. So if you don't have one done, it's going to delay the process for a couple of weeks till the surveyor can get out there and get done. The last thing you need to know is know the claims history. Ask questions. If there have been repeated claims, they could be in a category of what we call severe repetitive loss, and we'll cover that a little bit later. We're going to cover it right now. So we look at severe repetitive losses at any NFIP insured property that has met at least one of the following paid losses criteria since 1978, regardless of ownership. That would be 4 or more separate claim payments of more than $5,000 each. That includes both building and contents, or 2 or more separate claim payments, building payments only, where the total of the payments exceeds the current value of the property. So in either case, they're going back 10 years. The second one, they're going, if you have 2 or more claim payments, and they're going to go back within a 10-year period. But if you have multiple location losses within the same time frame, they're 10 days apart, that'll count that as one loss. But they're going back to 1978 or since the building's construction, if it was after 1978. Now, why is this important? We've had a lot of floods here in South Carolina in the last 2 years. We had the 2015 floods in October. We had the 2016 floods in October again, which were associated with Hurricane Matthew. Now we have, Hurricane Harvey and Irma, and we have now a series where we're having, higher than normal frequency of flooding events in South Carolina. So it's going to be very important. Once they hit this category, they get removed to what we call the severe repetitive loss facility. And their loss history, for example, I'll give you an example here. 2016, we had a claim of paid for $144,627. 2015, we had a claim paid of $7,016. In 2009, we had a claim paid of $12,434. And in 1999, there was a claim paid for $248. We have now paid since 1999 164% of the current building value of $101,000. So the interesting thing is that's a lot of money we've paid out. So what happens? Now we have this building that's out there that's being charged, that we've paid in claims 164% of the building value. Biggert-Waters changed the rates for subsidized rates. So if this house is pre-firm subsidized, they're no longer going to be qualified for the subsidized rates. They'll be phased out. So they're in that category where it's going to be going up 25% annually. So once it's designated as a severe repetitive loss property, they're going to go through what we call re-underwriting. That re-underwriting could change the rate the initial year so that the increase would be greater than 25%. And it could go up, it could double. For example, if the policy that was in place at the time prior to the last loss was rated as an elevated building, and they found out that it doesn't qualify as an elevated building because of drywall or sheetrock or no openings or whatever, or because the rules have changed over the years for whatever reason, they're going to re-underwrite that policy and rate it based on today's standards. So in one case, I know that the rate has gone up 90% the first year. And then each subsequent year, it's going to go up 25% increase. So the annual rates are going to climb 25% until we reach what we call full risk rate. And that is the rate that would apply using the elevation certificate. So if we rate it using the elevation certificate, then that's where we stop with the 25% increases. Some cases, that's going to be around $14,000, $18,000 annual premium. So it's very important that we do our research and homework and that we make sure that the properties we're listing, we're not going to have problems with at closing. You're not going to know if it's a severe repetitive loss property unless the seller tells you, or you get a copy of the declaration page. It'll be listed on there. If they don't have flood insurance, then you're not going to know at all until you go get the quote and the policy. And then you'll find out that at that time that it's a severe repetitive loss. So it's always best to buy the policy before you list the house. That way there are no unknowns. Claims reporting lags about 12 months. So seller disclosure is absolutely critical. So when we're looking at these policies, we need to make sure that they're disclosing everything that's happened within the last 12 months, because the insurance agents are not going to know until potentially it's too late. Okay, number 4, the flood policy at closing is a non-binding quote. So what does that mean? That means we go get a quote, and I have a client. They were buying a house, and the insurance agent quoted them a policy of $2,500. They went to closing, bought the house, and they're happy, and everything's good. And then 3 weeks after closing, the insurance company says, oops, there's a mistake. Please send us another $9,000 for a total premium of $11,500. I'm not sure where you come up with $9,000 within 30 days in order to sustain that policy. That's a huge jump. In actuality, when I looked at the policy, the insurance company was wrong. The insurance agent was wrong. The actual premium was $1,765. It all depends on how the information is presented to the company. It's presented truthfully, and the agent doesn't make mistakes. So the actual premium is $1,765. So rather than sending in the $9,000, the buyers had actually just sold their home, their second home, and were able to pay off the mortgage, and now are paying $1,765 now for their premium. We work with clients who get into these situations where the premium is so high, and we look for ways to reduce it. That's what we do here at Carolina Flood Solutions. Number 5, you really want to make sure that the seller's policy has been reviewed by an expert. You want to make sure that the policy is rated correctly. Some home improvements can destroy an insurance rating. For example, since we have Home Depot and we have the home improvement shows, they're wonderful. They've taught us how to make our homes look like $1 million homes, how to improve the foyers and our building entrances and things like that. But those things can destroy the insurance rating. So when we're looking at where our rating begins on our structure, it's below the base flood elevation. Anything below the base flood elevation, we need to leave unfinished. It can not be used for building access. It can only be used, for building access, limited storage, and parking of vehicles. When you start adding finishes like drywall, if you have more than 20 linear feet of drywall, you have dropped your building to a slab-on-grade building. If you have an elevated building in the coastal area, you've now lowered that rating. So drywall is one of the things that's a stickler. The other thing is that they'll allow you to paint cinder block. But if you have wood and you paint the wood, that is considered a finished product. So stay away from painting wood. You can paint concrete, but don't put up drywall. And if you do put it up, make sure it's less than 20 linear feet. Those home improvements can destroy an insurance rating. And so when the buyer goes to assume the seller's policy, the first thing that the insurance company is going to do is ask for new pictures. And so they're going to be looking at pictures of the enclosures and what is happening or what has happened to that house since they last looked at it. They are required to re-underwrite these policies. And so when you're going through this, we need to make absolutely sure that the improvements that the homeowners made have not destroyed the insurance rating on that building. Because once again, when they go to get the quote, if they don't have a flood insurance policy, then the rating may change and it may disqualify those people from a mortgage. I've run into a couple situations here lately where we've really had to work to make the homeowner qualified for their mortgage just because of the flood insurance. Flood insurance is a huge factor. And so as you're going through this process, it's very important. Do we have any questions out there?
Lisa, I don't see any right now. I'll let you know.
Okay. All right. So are there any issues that anybody's coming up with? Feel free to chime in.
We just got one. Someone asked if a raised home has wood and brick finishes but no living quarters underneath and the owner paints it. Are you saying that lattice cannot be painted?
Lattice can be painted. Lattice is fine, but where you have a solid wood or solid enclosure, solid wall on the and they paint the interior, that is considered a finish if they've painted more than 20 linear feet. That's a good question. Are there other questions out there?
Another person asked if there will be a replay of this. Just to let everyone know, if you want to watch a replay of any of our webinars, you can watch them on our YouTube channel at youtube.com/screaltors, or you could go to screaltors.org/webinar-archive, and we'll have this video posted there. It should be posted later today. So, otherwise, right now we don't have any questions. I'll let you know if we get any more.
Okay, good. So, mortgage qualification is a big deal. And so, again, making sure that you have the policy in place, that there are no surprises, will help transition the house to the new buyer. So to find a good insurance agent who knows flood. We only do flood here at Choice Flood Insurance. We don't do homeowners. We don't do wind. We write in and out of South Carolina. And again, going back to the 5 things that you need to know is you need to make sure that you have a policy in place. You need to make sure that you've asked questions about the flood zone. You know what flood zone it's in now, and if the flood zone's changing. You need to know if the claims history. You need to look at seller disclosure. It's really critical right now because we've had so many hurricanes that we pay attention to the disclosure forms. If you get water in the crawl space, there's issues of mold. We want to make sure that everything's been properly addressed and that we have, nothing that's going to delay the closing. We want to get we have a shortage inventory on the market, and we want to make sure that we have proper documentation so that these houses get sold quickly and there are no delays. I'm happy to answer any questions at this point as we go through this. Again, pay attention to the claims and ask about repetitive losses. If they've properties have had prior flood claims, it could be a red flag, and people may not qualify for their mortgages. But we want to make sure. And people make mistakes. The federal government makes mistakes on those claims, and so we want to make sure that if the claims associated with that building actually belong to that building as well. So there is a way to appeal that severe repetitive loss, but it all takes time. And if you have to take that time at closing, then that's going to be a concern.
Okay, Lisa, we've got a couple questions here. Can you clarify the effective date of the new flood maps for Dorchester County? Is there a wait period, or are they already in effect?
They're already in effect. According to my data, they went into effect on July 18th of this year.
And we got another person asking, what about Charleston County with the effective flood maps?
We do not have a date for that yet. The letter of final determination has not been issued. My understanding, it will be issued the end of this year or first of next year.
Okay, another question here. Someone said an insurance agent just informed me the vents in crawl spaces are now a risk to flood insurance. Can you elaborate on that?
Well, it's really kind of interesting. There's a lot of things that are risk to flood insurance. One of them is the flood vents. If they don't have the right flood vents, if they're not located at the right height, if they don't permit the automatic entry and exit of floodwaters, or they don't have a sufficient number, then flood vents do impact insurance rating. But there are other things that impact insurance rating as well. So we want to make sure that we've looked at everything in its totality. But with the house, I had a client who was told to put flood vents in his house. He spent $5,600 and he put flood vents in his house, and flood vents were not his problem. His problem was he had a subgrade crawl space. So flood vents won't help you when you have a subgrade crawl space. Like again, I said earlier, another thing that'll impact is finished materials, such as tile, drywall, those types of finishings. Bathrooms. People like to have a bathroom on the lower level near their pool, or by the if they live near the ocean, they want to have that lower level so people don't have to go upstairs to go to the bathroom. That bathroom down there will affect your insurance rating. That was a very, very good question. So it's not just, flood vents alone may not be the sole answer. So everything needs to be looked at in its totality. Did that cover your answer?
She said yes, it did. We've got another question here. What is the most accurate way to get prior claim information for a home?
You have to talk to the insurance agent, but again, the insurance agent can't get information, that's if it's within the last 12 months. Like I have access to some data and it hasn't popped up in the claims from Matthew haven't populated yet, and I'm asking why. So within the last 12 months, if it's older than that, I can get the claims data. But after that, if it's in the last 12 months, I don't have access to it.
Okay, we've got another question about the flood maps. Someone wants to know, are Horry and Georgetown flood maps going through as proposed?
My understanding is that there are some changes. There may not be any changes made. In some of the panels, I think they're just going to go through and refine some areas, but I think they're going to go through as proposed. I haven't heard of any major changes.
Okay, we've got another question. What about elevators in an elevated home? Does it always raise flood insurance?
Yes. That's the interesting thing, is that everybody wants to have an elevator in the center of their house. And man, I'd love to do just a seminar one day on elevators. Hang on one second to see. Well, I can't find it that quick. But I have some materials that talks about elevators. You can if you put the elevator on the outside of the house and attach it as an addition, put that elevator shaft out there, it is so much easier for insurance rating, because we can rate the elevator as a separate structure, as a standalone building. So that is a very, very good question. But when you put that elevator shaft on the interior, that elevator shaft has to have openings. It has to have all the equipment elevated above, and it has to meet the same criteria as any enclosure. And yes, they will load for an elevator, but they'll load for less if it's in compliance.
Okay, another question here. If a property has flood insurance and it's removed because the home is not in a floodplain, is it better to keep in place, or can it be dropped without concern?
That's another good question as well. Flood insurance in what we call when it gets moved from a high risk zone, which begins with an A or a B, into a low risk zone, which is a B, C, or X. Everybody says, well, I'm out of the flood zone, I can, let the flood insurance drop. But 1/3 of the claims that we have come from properties that are in those low risk zones. So when we're looking at the low risk zone, then what's my chance of flooding? Everybody says, I'm in the low risk zone, so yeah, I'm going to drop it. But yet when we have a flood, disaster assistance is not going to make you whole. Again, you're going to have to have a flood insurance policy in place. So I always encourage my clients, when I do these letters of map amendments, to retain their flood insurance policy. After October 2015 floods, I had 6 map amendments had been done. 5 kept their policies, and 4 got flooded. So that's a critical component, and it also adds that peace of mind. It's cheap. It's $500 a year roughly if it's your primary residence, and that's easy enough. Good question.
Okay, Lisa, I don't see any other questions. So thanks for. Oh, one just popped in.
Okay, good.
I have a 1967 home that has an elevation certificate. Home is it looks like 2 foot below base elevation. Sellers have a flood policy at $1,200, but we are now getting quotes with a minimum $10K deductible for $1,700 and as high as $3,100. And they're not sure how to advise their client.
If they would like to send that to me at Lisa,
Yep.
LISA at simplyflood.com, I'd be happy to take a look at it for them.
Okay. All right. Well, I don't see any other. Can you say your email one more time?
LISA at simply, SIMPLY, flood, FLOOD.com.
Okay. And I don't think we have any other questions. So thanks for joining us today, Lisa. And we do have other past webinars dealing with flood that Lisa's done for us. So you can check those out on the webinar archive as well. Like I said, this will be posted on our YouTube channel at youtube.com/SC Realtors. And if you go to the playlist, you can see the SCR webinar series. It will be the newest one on top of that list. Or you could just go to screaltors.org/webinar-archive. All right. And thanks for joining us.
Thank you very much for having me today.
All right. Thanks. And everyone have a great day.